Imagine a small bakery, one oven, one owner, one big dream. You're in line on a Saturday morning, waiting to buy the best bread in Paris. But the bakery is small, one oven, one owner. Now imagine that bakery has another 20 stores in the city, so no waiting time. You step into the store, buy the bread, and step out of the store. Barely 3 minutes. Great, right? But to open another 20 bakeries, the owner needs a lot of money. So instead of borrowing from a bank, the owner offers a deal. Help me grow, and I'll give you ownership. You don't buy bread, you don't buy equipment, you buy a piece of the business itself. That idea of shared ownership is the foundation of stocks. This video explains what stocks are, how the stock market works, and why everyone pays attention to them. What then is a stock? A stock is a share of ownership in a company. Companies issue stocks to raise money, to grow, expand, or invest in the future. What happens when you buy one? Well, 3 things happen when you buy a stock. Firstly, you own a company. Secondly, if the company grows, your share can become more valuable. If the company struggles, however, the price can fall. That's where opportunity and risk come into play in stock trading. So where do people buy and sell stocks? That happens in the stock market, a place where buyers and sellers meet to trade shares. Most individual investors access the market through regulated brokers, such as FXGT. These brokers connect you directly to the market and help make trading simple, safe, and efficient. Trades take place on exchanges like the NYSE or Nasdaq, where buy and sell orders are matched. Prices move based on supply and demand. More buyers push prices up, more sellers push them down. Ever noticed how global news can suddenly shake the markets? Unpredictable weather, global injustices, or even an oil pipeline collapse at sea. Events like these don't just make headlines, they can move stock prices. That's because markets react to earnings reports, economic data, and major global events, sometimes triggering sharp and unexpected price swings. How do we tell if the market is doing well or poorly? We use stock indexes. Think of them as a thermometer for the market. Indexes like the S&P 500, Dow, and Nasdaq combine major companies into one number. They show whether the market is generally moving up or down without tracking every stock. This is how to invest in stocks. People approach stocks in different ways, long-term investing or short-term trading. Irrespective of the style, all trading involves risk. That's why it's important to understand your goals, learn the basics, and even start in a demo environment. With FXGT, you get the tools, transparency, a demo account using virtual funds, and support to help you make informed decisions, not guesses. With FXGT, you can trade stock CFDs anytime, anywhere through our mobile app. To recap, stocks mean ownership. Markets are where they're traded, and indexes show the overall trend. Remember the thermometer? Learning comes first, step by step. And that's where FXGT comes in to support you. Stay tuned for our next video on key trading terms every beginner should know. We're here to make learning easier, clearer, and more enjoyable, so you can trade with FXGT with confidence.
FXGT, where traditional meets digital.